You are listening to chartingwealth.com for Monday, the 9th of April, 2018. This is the comprehensive review and forecast. We are attaching with the email going out to all of our subscribers. And again, to be a subscriber, just go to chartingwealth.com and sign up. You are getting a link to Chapter 8, the minor indicators. That includes the derivative oscillator, how we use it. It includes the Bollinger Bands, how we use those, and how we use the various moving averages that we use on our charts. The exponential moving averages on the top part of the chart, and the simple moving averages we use on the bottom of our chart. So please, if you've not listened to that chapter, it is available at our YouTube channel. I encourage you to go there. When you go there, be sure to subscribe there also. We've got several thousand subscribers, and we appreciate every single one of you. Just a quick lesson. We saw where our 50-period moving average on the 2-day chart ended up providing some support where things dropped down to and then bounced off of. And of course, once it pushed through the 50-period moving average, the market just rocketed on down after that. So again, understanding moving averages, understanding the derivative oscillator, how we use the minor indicators, the Bollinger Bands, those types of things are important. Chapter 8 in the book will help you understand that even better. And I have great news about the book. I am almost finished with my proofing. I have finished all the writing in the book, and we have located an editor that we are going to hire to edit it. And I am hoping that over the course of literally just the next couple of weeks, we will have that done. We will be publishing that, and we will be making it available to you. I'm excited about Charting Wealth, the book. Okay, let's jump into Charting Wealth, the video podcast, and cover the comprehensive review and forecast. What's happened this week? Well, the way we ended up the week, we have the S&P 500 down 2.2%. Now, this is a lot of percentage movement we've had over the last several days, up and down. And of course, as we look at our weekly chart, which is where we always start, we see that we have 3 down candles, nice, consistent down movement. Derivative oscillator, however, is not going down. It actually peaked in down movement all the way back on the week ending the 2nd of March. Part of the reason for that was the big blowout downturn that occurred back in February on the 9th. Remember that big down week? Well, that sort of kicked a lot of the cinder blocks out from under the foundation of the market. The market moved up the following week, a little bit the week after that, and then really just started sliding sideways. It did peak up for the week ending, let's see, that would be the 16th of March. And then for the last 3 weeks, it's been down weeks. Our Heikin-Ashi candlesticks are showing significant down movement. We see wicks on the bottom of solid red down candles, price movement well below the weekly trend line. The only part of concern here is that the derivative oscillator continues to lose that downward momentum. But again, the price percent oscillator is our main oscillator. What do we see on the 2-day chart? Well, our indicator, even though price movement shows some sideways sliding and upward movement, the price percent oscillator headed down. Derivative oscillator losing some of its downward momentum, but not the price percent oscillator, which is indeed interesting. Price movement, again, well below the weekly trend line. It did penetrate the 2-day trend line. So some warning bells going out there as far as the Heikin-Ashi candlesticks go, but supported by continued down move in the price percent oscillator. What do we see on the 4-hour chart? Well, it's interesting. The 4-hour chart has completed its pullback, and, well, I'm sorry, it's not completed its pullback. It appears to be completing a pullback, might be headed over, going down as the week starts off. We'll wait and see. Looks like the market peaked out back on Thursday in the afternoon and then slid sideways in the morning the afternoon on Thursday. It peaked in the morning on Thursday, started moving sideways in the afternoon, and then down hard on Friday. We will see if you do see a crossover going down at the beginning of the week. Don't forget, the weekly chart's in a confirmed down move. The 2-day chart is in a confirmed down move. So jump in and ride that baby. We did have a false crossover, a real trickster that happened. But again, even if you jumped in then and stayed in, that has been recovered. And again, that's tough when you have these little tricksters where the price percent oscillator rotates over. Derivative oscillator was already in the positive. And it is interesting when that derivative oscillator has already started that up movement, then you have the crossover and then an immediate cross back. Those are the worst kind that suck you in, and then all of a sudden you see it cross back over, you jump in, it runs down sideways and then peaks up. Part of the tell on that is when it crossed over going down, the one thing that didn't cross over was your derivative oscillator. We love to see that derivative oscillator cross over at the same time that your price percent oscillator crosses over, like we saw back on the 15th in the morning when there was a double cross. That's what we like to see the best. That's usually the safest and the longest term. So again, just keep that in mind. Again, that has recovered or is in the process. It appears to be recovering, but not the way we like to see the charts work. But hey, that's what makes this fun. It's not always the same every time. That's why we practice, and we practice on specific charts so we start to understand them like a comfortable pair of jeans. Okay, let's go. Don't know where that came from. Let's go to the Qs. What do we see going on in the Qs? Again, 3 weeks of strong down movement. Nice trend line on that weekly chart. Derivative oscillator gaining downward momentum. So is the price percent oscillator. That's quite beautiful. We look at the 2-day chart. What do we see? Well, that got penetrated over the course of the last 2 days with up movement. It is a green spinning top at this point. Again, it is an open box green spinning top. Again, that means indecision tending up. Price movement still below the weekly trend line, but not below the 2-day. However, the 2-day is canting down strongly, and our big indicator, our major indicator, the price percent oscillator, derivative oscillator, is losing downward momentum. Check out that 4-hour chart. What do you see? It might also cross over going down. If that does happen, then of course that can present you with a jumping in point for a down move on the Qs. Keep your eye on that over the course of the next week. Check the charts at noon and in the afternoon on Monday. Do the same on Tuesday and just see if that does yield some fruit. Okay, let's go back to our weekly chart. Take a look at TLT. Remember, we had a weekly vertical crossover going up for the week ending the 29th. And again, that was a Thursday, not a Friday, because we had Good Friday last week. But we have a green up candle over the course of this week. Derivative oscillator gaining energy. Price percent oscillator is heading up. It sure took some time over the course of the week, and we'll continue to sort of see what happened. What we saw occurring is after we only had one 2-day candle that was up, these latest have actually rolled over and started going down. Although the price percent oscillator's headed up, derivative oscillator losing energy. We do have a down candle. It's a fairly significant down candle with a wick on the bottom, no wick on top after the spinning top on that prior. But again, it's penetrated the 2-day trend line. But our price percent oscillator continues to head up, which gives us some hope. As we look at the 4-hour chart, what do we see? Well, we saw a lot of down movement through Thursday, and then we had nice strong up movement, 0.08, so 1.08 over the course of the day on Friday. If we see a crossover going up at the beginning of the week, it might give us a jumping in chance on that weekly vertical crossover going up. So keep your eye on things. Again, we might have a number of opportunities in stocks and in bonds. So keep your eye on the prize. Now, lastly, we'll go to the weekly chart. On gold, what do we see happening on gold? Well, gold just will not cross over going up, will it? It tried really hard to do so back on the week ending the 23rd of March and could not do so the week ending the 29th and could not do so, that is the 29th of March, could not do so this week ending the 6th of April. We have a red spinning top, which means indecision tending down. We have the weekly chart in a confirmed down move. As we look at the 2-day chart, what do we see going on there? Trying its best to cross over, going down. Again, a note of caution, it's really close to crossing over. You could try to call it that. The derivative oscillator, however, is still in the positive, which gives us a little bit of warning. We do see a strong red down candle, and we are very close to a crossing over on that 2-day chart. We look at the 4-hour chart. What do we see? Well, of course, it crossed over going down back on the afternoon of Wednesday, the 28th, and then sort of went up and sideways and down and up in the morning on Friday, a little down in the afternoon. Again, we're going to have to see more consistency. This 2-day chart's going to have to roll over going down if there's going to be a down trade in gold. Don't have that yet. Keep your eye on it. But more importantly, over the course of the week, keep your eyes on the S&P 500, the Qs, and those charts in particular, and the Qs especially, and also on 20-year bonds, TLT. Folks, that's where we are as we end the day on Friday. Thank you for being with us this week, particularly helping us suffer through our website being hacked. It was so great to get it back within a day. And sorry, we just missed that whole day. I guess, what was that? It seems like a blur now. That might have been, I guess that was on Tuesday. Anyway, we got everything back going well. God bless you, my friends. You have questions, problems, concerns, let us hear from you. CW@chartingwealth.com. All the best.